You're listening to the HNC Let's Talk podcast, hosted by Dexter Brooks. Thanks for tuning in to HNC Let's Talk podcast. We partner with subject matter experts to provide candid conversations on health and lifestyle. Here at HNC Let's Talk podcast, mental, physical, spiritual, financial, and health are all connected. This episode of HNC Let's Talk podcast is sponsored by HealthNet Co. Together, we make insurance simple.
Good afternoon. This is Dexter Brooks with HNC Let's Talk podcast. I have our co-guest, our co-host, which is Demetrius Rayden Johnson with me today. How you doing, Demetrius?
Doing really good. How are you doing, Dexter?
I'm doing much better. It's been a long month, but every day gets better and better, so I cannot complain.
Yeah, I hear you. It definitely has been a long month, and I know you've had especially a long month.
Oh, yes, absolutely. Now, I know we're picking up basically talk from life insurance, and we're going to pick back up on that again.
Yeah. Just basically wanted to do a, kind of a part two to the life insurance conversation and, get into more of life insurance as a tool for, both businesses, and also talk about life insurance as a generational wealth tool. And then also talk about the importance of insurable interest and what that means.
Okay.
And so, we talked last podcast about, insuring ourselves and making sure that, we have proper life insurance in place. We talked a little bit about term life and whole life, and just wanted to continue that conversation just because life insurance is such a broad topic. Wanted to look at it maybe from through another lens here on this second episode.
Sounds good. So let's go back and talk about that insurable interest, because I believe I asked a question before about insuring like my great nieces or my great nephews and whether or not I had the right to do that.
Right. The conversation of, insurable interest, generally speaking, insurable interest is where, that other person's life in one way or another impacts you financially as to whether you might have insurable interest in that person. And it's generally assumed that people that are in your immediate family, that you would have an insurable interest in them, like your mom and your dad, maybe your spouse and your kids and those folks. But then it gets a little bit fuzzy when we have conversations about, your aunt and your grandniece and your your third cousin removed and all these, these other people. And so, I would say as a rule of thumb that people that are within your immediate family and maybe even your extended family to cousins and aunts and uncles, that you would automatically have an insurable interest there. Now, so far as people way down the line, like your great grandniece and your, these other people, you may or may not have an insurable interest in them, depending upon, how close you are to them and if their life affects you in any type of meaningful way financially. And so, but it's generally speaking, your family, you're pretty safe as saying that you would have an insurable interest in them.
Got it. Because it's almost, it almost sounds as if though it boils down to, like you say, whether or not that family member you have a financial connection with that family member in some type of sort of way. Like a lot of times your siblings may end up living with you, your mother may end up living with you. It's very rare you may have a great niece or a great nephew that may end up living with you, but you know what I mean?
Yeah, but you never know.
But you never know.
Depending on the family, and you might have people where it's your second cousin, and and maybe they help you out with your kids and they're babysitting, or, you might, I've seen all types of things. And normally, again, when it's your family, there's some general assumption that you would have, some degree of insurable interest in that person. And when we're talking about insurable interest, just to be clear that, this is talking about this is from a standpoint of saying, I will be purchasing life insurance on this person, like whether, I'm going to buy life insurance on my grandniece or my, my second cousin and that kind of thing. And so, if that person were to pass away and then, the death benefit be paid out either to myself or to even their kids, there's certain situations, and we talked about this during the first podcast, where, there are 4 basic parties to a life insurance policy. And that's the owner of the policy, the insured, the beneficiary, and the payer of the policy, who's going to pay the premiums. Mm-hmm. And in some cases, 3 of those people can be the same person. So the payer of the policy, the owner of the policy, and the insured can be the same person. Now, obviously, the beneficiary cannot be the same person, because you can't be the insured and then once you pass away also receive the death benefits of the policy. That has to go to someone else. But, generally speaking, those 4 seats or those 4 identities can be either, 1 or 2 people, or they could be 4 different people. So, I could be paying for a policy and insuring my mother. And then, I can also be, the owner of the policy and then have the beneficiary be either myself or someone else. And so there's a number of different ways that you can set up these policies. Now, when we're talking about insurability, it very well could be that I could insure my second niece and then have my second niece's daughter be the beneficiary, and there wouldn't be any problem with that. And I could also pay for the policy, or my second niece could pay for a policy. So, it can get a little confusing, but it's very flexible. And that's why it's important to seek the counsel of a professional when you're trying to do something that maybe is out of the ordinary. But yeah, you can definitely get really creative with these policies, and you can create some family legacies there, taking advantage of the insurability portion of how life insurance works.
I've had a lot of questions over the years regarding life insurance. One of the main ones I've had that I've never came up with an answer with is that people will ask the question, can they provide insurance or life insurance if they're waiting to become a legal citizen, or they have a sibling that's here that's not a legal citizen?
Now that, I've had that question as well, because some of the community work that I do involves African immigrants in Colorado. And so, folks from, Ethiopia and Nigeria, they might be first generation or second generation African immigrants, and they would like to maybe buy a policy on their parents who reside here in the United States, but may not be a citizen per se.
Correct.
And so the insurance carriers or the insurance companies themselves have different stipulations as to who can be insured. There's a general guideline that says, yes, of course, the person has to be a citizen that's being insured. But I've worked with insurance companies that will say, as long as that person, is I think, and I'm drawing from memory here, so you have to forgive me, but I believe that I've had one insurance company in particular say, well, as long as they are a legal resident of the United States. And, but that it can get a little tricky when you're dealing with folks that are from another country. But it definitely is something that can be done. It's just that you have to, look for the right provider and then make sure of the status of the person being insured. They don't necessarily have to be or have full citizenship. I've been advised by certain insurance carriers to get life insurance. That being said, there does need to be some sort of, social security number or, tax identification number of some sort associated with the person.
Oh, got it. Now that makes a lot of sense.
Yeah, that's one of the projects that I'm actually working on is within some of the immigrant communities. They're very interested in, maybe sending money back home, taking advantage of the exchange rate from here to different countries in Africa where they say, well, we want to insure grandma or I want to insure my dad and he's a little bit older and we're going to take those death benefits and we're going to, help out folks, in our home country and that kind of thing. So I've had those types of conversations with clients as well. And I think that's can be a pretty cool thing on both a micro level and then potentially on a macro level as well.
So let's touch base on how do you build wealth with life insurance?
Well, building wealth with life insurance, when you're going to use life insurance as a generational wealth building tool, it can be very, very effective from the standpoint of, taking advantage of some of the living benefits with the cash value accumulating, having that flexibility to use that cash can be helpful. Also, the death benefit, making sure that life insurance policy, once the insured passes away, using those dollars to pay off debt, to purchase homes, to fund a child's college education. These are all ways in which life insurance can help to free people of some of the financial burdens that they might have and allow them to more easily accumulate wealth. In addition to paying off debt and those types of things, I've seen people use life insurance in very creative ways to help with the retention of assets. Life insurance companies tend to be fairly generous when it comes to how much life insurance that you can purchase. And so when we start talking about insuring people for millions of dollars, then, we start moving away from the conversation about covering basic needs and then talking about creating a legacy and generational wealth, taking it kind of to that next level with life insurance.
Okay. So
it's a very effective tool to do that.
So basically that's under the dollar amount. So the larger the down amount, you can basically look at is creating a generational wealth versus just taking care of the basic needs.
Yeah. And that's exactly right. And so, depending on your goal and what you're trying to do, life insurance can help to facilitate a number of different things within your overall financial plan. So, I've used life insurance in a number of different ways. Some people like to use it in a very simple way. They just want to use the cash value that's building in that life insurance policy as a means by which to have a guaranteed asset class that balances out their investment portfolio. If you're out there and you have a moderately aggressive or an aggressive risk tolerance in your investment side of your plan, that risk tolerance can be brought down a little bit. Your risk can be brought down a little bit by having a non-correlated, guaranteed cash value as almost like an alternative asset class for you. Life insurance is not an investment, but the cash value within life insurance is considered to be an asset, and it's an asset that will not lose value. So, if you are very aggressive with your investments, you can rest a little bit more easily knowing that you have maybe another asset class over here on the side that's not going to lose you any money at all, that is gaining, potentially between, maybe 4 and 6% dividend every year.
Now, I know we talked last week, the week before last, and we mentioned, I think it was business overhead expense is type of life insurance policy that businesses utilize to make sure that the spouse don't jump in the business and ruin your.
Yeah. We spoke a little bit about, helping to facilitate cross-purchase agreements and, using it within, a business context. And I've used life insurance with attorneys. Attorneys really like using life insurance to help facilitate these cross-purchase agreements. So let me give you an example where, like you spoke of, where maybe we have 2 attorneys or 3 attorneys where, if one of the partners of the firm passes away, then that part of the business needs to be bought out or it needs to be settled. And life insurance can help to do that. So one attorney might buy life insurance on the other party. And, and when one of those persons passes away, or if they pass away prematurely, then, that family can basically, buy out that part of the business and be made whole financially. And also it can help to prevent from having maybe unwanted, family members come in and start running the law firm or saying that they're now part owner of the law firm. So, you can use life insurance in a number of different ways in a business context as well.
I think that's part of one of the better tools that I've heard.
Yeah. When it comes to, maybe a business and, even with a dental practice, and I always use the attorney example just because I've seen it so often, where you don't necessarily want to have the spouse come in and say, well, now that, John has passed away, I am now Susan, the spouse, and I have 33% or 50% say so in this business, even though I may not have been involved or may not have any knowledge of the law firm or the business at all. And so, that can be a pain in the neck to the surviving partners of the firm. And so, that's one thing that life insurance can help to avoid. But it's more of a secondary benefit to the fact that, that family, that attorney had a family, and maybe that business was a large portion of that person's income or that person's wealth, and part of their plan. And so making that attorney's family whole through that life insurance policy, is a huge benefit to that attorney's family as well. So, depending on how you look at things, it can benefit all parties involved.
Now, question, how often should a person has already purchased a life insurance policy, and the policy is basically probably, say, low, maybe 30,000, and I don't know whether or not they have term life, whole life, or universal life, but how often should they actually go back and review that policy or look at changing that policy?
Well, I personally meet with my clients every 6 months, but I would say at least once a year. And this just goes in line with your overall financial plan. I think that people should revisit their financial plan at least on an annual basis. And that includes the investment side of things as well as the life insurance side of things. So I would say at least annually. If I can get a client to, meet with me every 6 months, that's great. But I expect that we meet at least once a year, at least have some sort of conversation as to how the plan is going. Keep me abreast of any changes, any material changes in their financial situation that might cause a need for some sort of adjustment. So, I would say as a general rule of thumb, at least annually.
All right, guys, you hear that? Once a year, you need to check back with your broker. Check back and touch base with Demetrius Rayden Johnson, because, you don't want to miss out on any funds or any opportunity to make any changes.
Yeah, I would definitely say at least every year, because life happens, and something that happens in your life that you might not think would affect your financial plan or your life insurance policy, it might very well. And so that's why it's important to have, someone that can help you, because you might not be aware of how a life situation might impact your financial plan. You might not have a full grasp of the gravity of the situation. You might say, oh, well, we switched jobs, or we got one of either the husband or the wife got a big raise, or they changed careers, or maybe, now you're taking care of your great grandniece, ensure your insurable interest so far as your family and your friends and your business, it can change over time. It's not something that is an end all be all thing. You could not have insurable interest in someone, and then something could happen, and now you do. So, I would say to keep in contact with your financial advisor, whoever you're talking to, your financial coach or mentor, whoever it is that you're talking to and trust. Definitely on an annual basis at least.
So let's touch base on because when you think about the terminology, because there's the broker, there's the agent, there's the financial advisor, there's the wealth management planner. What is the difference between all of this? You know what I mean? It's like
this is a huge issue. In my mind, and maybe I only make it a huge issue in my mind because of, being in the industry, but having all these different titles, some of them are arbitrary and some of them are kind of made up, and some of them are actual licensed titles that people have. And so, you don't want to discount people's certifications and their experience. But generally speaking, you want to be working with someone that has some sort of licenses and experience in the industry. The term financial advisor is a very loose term. It's not something that is a licensed title per se, financial advisor. We have an investment advisor or an investment advisor representative, which is someone who has their Series 65, who is a fiduciary. We have a broker on the investment side. We have, a stockbroker. These are people with their Series 7. Generally speaking, they're going to basically facilitate the purchase and sale of various investment products, and they collect a commission. And that Series 7 licenses them to get paid for the sale of investment products. And that's what that does. And so you also have Series 6. These guys are brokers as well to an extent, but they're limited to mutual funds and variable annuities, which have, which are tied to the stock market. But they're not, Series 7 is just one level above Series 6, as the number would lead you to believe. Series 7 is a pretty tough exam. I had Series 7. It's about a 6.5, 7-hour test or so. And,
that's 6 to 7 hours in a one sitting?
In a one sitting, yeah. So whenever I took Series 7, I took Series 6 first, and that was about a 3.5 hour test. And then I took Series 7, Series 7 being about 7 hours or so. And, they make you take a little 30-minute lunch in the middle, but it's pretty much most of the day. It's a pretty long test, and it's one of the harder tests that I've had to take. Thank God I didn't have to take it again. But it was definitely one of the tougher tests, and it's an endurance test. It's one of those ones where you have to sit there and be taking, all day taking this test. And so, it's not one to scoff at.
Man, that is a long test. Oh my.
Yeah. If you're dealing with someone that has their Series 7 or has had their Series 7, they're fairly invested in, no pun intended, but they're fairly invested in the industry so far as time commitment and knowledge and skill set. Then there's also, again, Series 65, and these are the investment advisor representatives. These are the people that have some sort of fiduciary responsibility. These folks, this Series 65 was a shorter test than Series 7, and Series 65 is also regulated by the states, the individual states, whereas Series 7 is regulated by FINRA, which FINRA is an entity that regulates all brokers throughout the entire nation. And so, there's issues or conversations to be had about the who's overseeing what. But the brokers, again, they are collecting a commission and helping to facilitate the purchase and sale of investment products. And, that's how they're compensated. So it's through that commission. Whereas folks with their Series 65, they are compensated based on their investment advice. They're charging a fee for their knowledge and their expertise and their experience. And they have that fiduciary responsibility with that Series 65. Now, I no longer hold any of those licenses. But of course, I still retain the knowledge and the experience. I just don't have the need to charge my clients for any of the investment advice and I don't, use any commission-based investments with my clients. And I provide more education and guidance at this point. Now, I am a broker in the sense of being a life insurance broker. So I've licensed with a number of different companies, insurance carriers, and I shop the market. And, if someone wants, to use this company or that company, or this company is a better fit for what they're trying to do, then I'm able to go out there and say, all right, well, this company and this product is maybe going to be the best fit for you. So in that sense, I'm a life insurance broker, as it were. And the life insurance companies, they pay me. My clients don't pay me directly for my service. And so, you do have to be careful when you're talking to people and they say, well, I'm a financial advisor. Well, financial advisor is not, a licensed title. It's something that you may do. You may advise people but that investment advisor representative, that person that has that Series 65, that's the person that has that fiduciary responsibility when it comes to the investment side of things. Now, myself as a life insurance broker, whenever you get your life insurance license, you're automatically a fiduciary as well. So, when my clients deal with me, I have a responsibility to do what's in their best interest, to treat their money like it was my money, basically.
Yep. So that's a good point. So people need to know that, when you're purchasing life insurance and like you said, your clients don't pay you. You're paid based from the companies, not from the client up front. So that's an important fact.
That is really important because, the life insurance companies, and we talked about this once before, whether you go to 1-800-lifeinsurance.com or whatever, whatever you see online or on the radio, companies advertising for life insurance, whether you go through them directly or whether you go through a broker, your premium payment is going to be the same because that is determined by, your individual factors, how old you are, how healthy you are, your medical exam and how much money you make and all those other things. So, why not take advantage of having someone that has a certain level of expertise in life insurance rather than going out there and trying to figure it out on your own? I think that there's value to be had in dealing with someone that has some expertise in the industry, for sure.
So now we've touched base on the life insurance. We touched base on that's for the individual as well as for the business. We even jumped into the fiduciary role. We even jumped into that long ass test for 7 and 8 hours. That's like, man, I can't get past that one. I'm sorry. It's like,
yeah, that's, and Series 7, and, I know we're talking about life insurance, but, when talking to me, it's difficult for me to separate life insurance from investments because when dealing with an individual or a family, I just have to have the conversation about both. And yeah, that Series 7 was one of the more challenging tests that I've ever had to take. And again, I'm glad that I didn't have to take it twice because it has similar fail rate to the bar. So the bar, obviously was a legal exam and, it's a difficult test. And Series 7 has a similar fail percentage. And so it's a pretty tough test. It's definitely not one to take lightly.
Well, at least now I know why the people that I've known, or people that I still know that still carry the Series 7, why they had this attitude. And I know why.
Yeah, it's,
it's not it's not one of those simple tests that you go, it only took me 2 or 3 hours. You spent 8 hours. So that means you spent a lot of hours studying and learning this.
Oh, yeah, it's very comprehensive. Series 7 is an extremely comprehensive test. And it is, I remember taking that test and I was thinking to myself, I hope that I don't have to take this test twice. I knock on wood here, got this wood table here. And, I've been very fortunate to not have to retake any licensing exams. And so I was glad that I definitely did not have to retake Series 7 because that would have not been a pleasant experience. It's not a fun test by any means.
So, Demetrius, what advice do you have for our listeners today on life insurance? What is your recommendations?
Well, my recommendation, outside of just, talking to, a life insurance professional, is to make sure that you have adequate coverage. And make sure that within yourself, be certain as to why you're purchasing the life insurance. Sometimes people want to buy life insurance just to relieve their family of debt. And some people have very specific things that they want to take care of. A lot of the people that I deal with, they want to make sure that they are making charitable contributions. They want to make sure that their spouse has no debt or no debt in the event that they pass away prematurely. They want to make sure that their financial plan continues on even if they pass away. Mm-hmm. And so, my thing is make sure of why you are purchasing life insurance. Know why you're doing it, and be aware of the different types of life insurance and the flexibility of that life insurance. It's important that the person that is being insured, or the person that is going out there and looking for life insurance, that they have to have a base level of knowledge. They don't need to know, all the details of variable, universal life, and they don't need to know all the different types of life insurance, but they do need to know, the basics, and they do need to, have an understanding of why life insurance is being included as part of their overall plan.
Awesome. Now, before we wrap up, how can our listeners reach out to you?
Well, the listeners can reach out to me. They can call me. They can call the business. The number is 720-722-1290. And that's my Colorado number. We're based in Colorado, even though I'm out here in Tennessee. Or they could do a Google search for D Squared Financial Group. And, we're working on a number of different things, ranging from, creating a local credit union in Colorado. We are working on, helping individuals, of course. And then most recently, we're also working on some things having to do with our immigrant community in Colorado as well. And so, whether it's becoming a client or whether it's becoming actively involved in some of the community projects that D Squared is working on, feel free to reach out to me either by phone, by email. I've attempted to make myself as searchable as possible online over these last couple of years. So, definitely search me up. Look for Demetrius Johnson or Demetrius Rayden Johnson. And, I'd love to, connect with folks that are interested in doing some community work and connecting with people that have a level of financial expertise to do some impactful community work as well. So there's a number of different reasons why people might want to reach out to myself or someone that is on our team. I've recently taken on a few new partners. So there is a good friend of mine, Coca Collins, who is a nurse, actually, and she has decided that she would like to get her life insurance license. And, she brings an interesting perspective to the group because she's got, well over a decade of nursing experience. And so she's able to really speak to the importance and the need of having not only life insurance, of course, but other types of insurance like disability insurance. She was telling me about how she sees people coming into the operating room and they might need to have a type of surgery or procedure that might prevent them from working in their full capacity. And that's where disability insurance comes in.
Absolutely.
And so, as our team grows and as more and more people get involved, we're able to, provide different tools and different perspectives and match people up with folks that might fit their need. I know oftentimes when dealing with female clients, I have quite a few female clients who are, either single or are business owners, and they might be, more comfortable dealing with a female financial advisor or a female broker, and we can pair them up with someone that might be able to help them out. So there's myself, and, we have estate planning attorneys that we work with. So in any help that you might need in any facet of financial planning or insurance or investing or education, reach out to myself or anyone on the team, and we'd be more than happy to help out listeners.
Awesome. So we're going to let you have the last word before we sign off today, Demetrius. What would that be?
Well, I don't know. The last word I would say is to, keep that money mindset. Make sure that you are adequately taken care of from a life insurance standpoint. I know a lot of people don't see life insurance as being the most exciting part of the financial plan, but it is definitely a cornerstone. It is definitely a key piece to the overall plan. We talked about during our first conversation about life insurance, about the importance of it. And if you have a plan that does not have a defense, that does not have protection as part of it, then your plan has holes in it that need to be filled. And so I know that people get really excited about the investment side of things, but definitely be sure that you have the protection side of things taken care of as well. And business owners, make sure that, your business from a succession planning standpoint is taken care of properly. Especially within minority communities, it is extremely important that businesses transfer from one generation to another, or at least transfer in a way that the wealth is retained within, the family one way or another. Your kids may not want to take over your restaurant, but all the time and energy that was spent building that restaurant and building that business or building that law practice, we want to preserve that as best we can. And life insurance is a tool that can be used to help facilitate that. So I would just part with saying, make sure that you have some education about insurance and make sure that it is definitely part of your plan in one way or another, because it definitely is something that matters.
Awesome. I want to thank you again, Demetrius, for joining me on HNC Let's Talk podcast. And on our next podcast, we're going to pick up on a different subject, but it still is going to fall up under the life insurance, but it's going to be all that wealth and planning. Is that correct?
Yes, definitely want to talk about that. Life insurance is a very versatile tool. And when you use it to balance out your investment strategy, it can exponentially benefit your overall plan.
All right. Until our next episode, everyone, be well and be safe.